The S&P 500 daily cloud chart shows price right near the cloud conversion line, and the cloud conversion line is just about in the middle of the channel 3 low and stark band lower band and the channel 3 high and stark band upper band. Price breaks below the cloud conversion line, and the Bollinger Band mid-band is right there at that level. And right above that 49.20 area is the moving average 2 in parentheses, which is the 21 period EMA. And right above that in solid blue is the 20 simple moving average at 49.42.98. So the 21 EMA has been underneath the 20 simple moving average since the 14th, so 3 days underneath it, and the last time it was underneath it was back here on January 24th, and it went above it and pretty much stayed above it. So this could be an early warning sign here for the 21 EMA underneath the 20 simple moving average. And here's a clip from the big board chart, and more ominous sign would be to have this 50 EMA at 4817.12 for now fall under the 50 simple moving average at 4813.12. So if that EMA 50 goes under the simple and the 21 is under the 20 simple, then I would say that's some trouble brewing, and caution flags will be flying all over the place. For now, the 21 EMA and 20 simple moving average lines have been traveling together, and the 21 has been porpoising up and down below that 20. So until that 50 EMA goes under the 50 simple, we'll just keep an eye on this development here. And here's a last look at what it looks like with everything switched on. And in this S&P 500 daily cloud chart, you can see a 50% disqualified momentum up at that level, and a close above it for end of day Tuesday on the 20th will qualify that level, and the 50% exhaustion level is right above the qualified and confirmed 100% propulsion exhaustion up. So for Tuesday, no concern about getting the momentum down levels for 50% and 100% qualified. And the trend factor down 1 is underneath that 49.20 level for the lower stark band and channel 3 low. So that's at 4906.31, so pretty good support between 4906 and 4920. And the S&P 500 weekly chart looking back to the COVID crash, and I'll zoom into this current area now. And price closed the week underneath this now qualified demand line. We don't pay much credence to qualifying nor confirming these demand or supply lines in the weekly chart, but it is qualified. And if it turns around, meaning price, and bumps back up above 5029.11 for the end of the week, this coming week, then this will be another qualified cancel line here like this, and I'll extend the qualified cancel line out But for now, it did close below this quite steep ongoing demand line. And the D wave, down wave C, and D wave, up wave 5 has shifted over once again. So that printed back here for the D wave, up wave 5, and has been traveling upwards and onwards ever since. And in this S&P 500 weekly chart, the drama is starting for this week. Not too high, but drama nonetheless, as 4 bars back from the open on Tuesday would be 4890.97 for a close. So a close below that level for end of week coming up, and the end of week would be Friday the 23rd. And this recycle count cell setup 16 will be negated, and I'll be a seller. Then if it does not close under this level here for a close, 4890.97 for this coming weekend, then next week the high drama starts, as we'll have a recycle count cell setup 17 printed, and I have my recycle count to 18 where it's set at. So that means for that next week, after this coming week, if we get to 17, then an 18 will print, and it needs to stay above this close, 4958.61. So this is the critical level to watch. I don't see much danger in closing under here for next week, but the week after this is going to be some high drama here at 4958.61. And next week, get a close above this close, 5005.57 for end of day Friday on the 23rd, I believe it was, yes. And the risk levels will become qualified, so that sequential clusters off of the other sequential, so 4974.24 for the cluster sequential, and the regular sequential 4969.32 will be qualified, along with this aggressive combo risk level and this aggressive sequential cell risk level and this combo cell risk level. So if it heads up and closes above this close for next week, end of week, then all of these will be qualified, and the week after would be a pretty easy confirmation bar to beat if it does that for this coming week. So the high drama is starting a little bit for this coming week, but the next week after that, which would be the 1st of March, Friday, so that's going to be the high drama, and to have it on a new month too, that's kind of heavy there. So we're going into a seasonally weak period, they say, but I say seasonality, schmeasonality, so I don't pay much attention to that. But we'll keep an eye on this level here. This is critical, 4958.61.